3. Trendline strategy. There are no single super smart forex trading tools that gives you income, profit and more profit. The only alternative is to use a combination of different methods to define desirable market forces over a period of time, to achieve a maximum number of high probability trades. Trend lines are the most common and accurate forex trading method to be testified by many successful traders. 3. Trend line strategy. Trend lines are an important tool in technical analysis for trend detection and confirmation. It is a straight line linking two or more price points and then expanding to lead you into the future. In an uptrend, lines will be drawn across significant lows and significant highs will be drawn in a downtrend. We may split them into three in order to approximately define trend lines as short-term trend lines, medium-term trend lines and long-term trend lines. 1. Short-term trend lines. Draw these lines for an uptrend across the latest two lows or for a downtrend across the latest two peaks. On a smaller time frame such as a 15-minute or 30-minute chart, better results are made. 2. Medium-term trend lines. On a larger time frame, like a 60-minute chart of forex, these are better observed. It either links the nearest significant low to current price action in an uptrend to the previous significant low, or the nearest significant high to current price action in a downtrend to the previous significant high. 3. Long-term trend lines. Using the same medium-term trend lines process, it uses higher time frames such as the 4-hour chart or the daily chart to draw long-term trend lines. As an important forex trading tool, the long-term trend line is considered. The regular chart is mostly used by large traders who typically do not participate in small movements at an intraday level. You can graphically analyze where the price is and where it is likely to bounce by drawing a trend line on a daily chart. But use trend lines with caution and discretion as a forex trading device. It will result in uncertainty and blurred analysis by coating the charts with every possible trend line. It is not a good idea to rely entirely on a trend line for a short time. They just give you a clear picture of the current price action. Over the course of a day, these are often broken. Their key use is to provide you with a simple, instant graphical representation of current price actions. When you observe price returning to the higher time frames to check a trend line, look at other variables, using previous highs and lows to mark key support and resistance in horizontal lines. Draw the degree of retraction and extension of Fibonacci. Calculate the pivot points on a daily basis and position them on your chart. View on your graph the 200 EMA exponential moving average. Keep learning. Keep earning. And I as always say practice. Practice. And practice. Best place to learn about stock market training. Technical analysis training. Price action trade. Fundamental analysis training. Options trading training. Forex trading training. Commodities trading training at NCFM Academy Hyderabad.in. Visit NCFM Academy Hyderabad number 406 Annapurna Block, Aditya Enclave, near Maitravanam, Amirpet, Hyderabad, India. Call +91 7702 486 328 landline +9140 485 60292.